Trump accounts, 529s, Roth accounts. Should you invest in all of them, one of them, or none of them for your children? Hi, I'm Doug Ray, president and founder of the Wealth Guardians and the Ray Financial Group.
And I'm Brice Payne, and you've entered the vault. Don't forget to hit those like and subscribe buttons down below the screen there if you want to catch all future episodes of The Vault with Doug, Garrett, and myself. And let's go ahead and go to school on this one, Doug. Trump accounts.
Yeah.
What are they? Never heard of these before?
No, because they were created by the Big Beautiful Bill.
Brand new.
Brand new.
Okay.
Basically, it says that babies born in 25 to 28, the government will seed for them $1,000 per account.
Okay.
And a family can contribute $5,000 a year into these Trump accounts.
Okay.
Interestingly, an employer or a charity cannot contribute up to $2,500 per year to these accounts.
As well. Okay.
These accounts are going to grow tax deferred, like your IRA. And then when you take the money out, then the earnings, the growth, are going to be taxable, possibly as ordinary income.
Okay.
So it's a lot like your IRA in that respect.
Yeah. Okay.
Okay. So the investment side of the story, it's probably going to be limited. My guess is, we don't know for sure right now, but my guess is they're going to be much like the TSP accounts that the government has.
Okay.
Maybe half a dozen or more different types of,
the thrift savings plans, and they're like about 8 different mutual funds that they have. Okay.
Yeah. So.
All right. So that's what a Trump account is. Interesting. Never had something like this before, but it might remind us a little bit of what a 529 account is. So how are these two things similar?
Yeah, let's kind of compare. Let's talk about the 529 first. Everybody's probably heard the term. It's obviously a savings plan to help put money aside to educate your children. Right now in a 529, we can put $19,000 per child into a plan, and if you're married, it's $38,000. So significantly more than a Trump account's going to allow. Now, this money is going to grow tax-free, and in the 529 plans are run by the individual state. But typically, on all these 529s, you have a lot more investment options that you might have, say, in the Trump accounts.
Okay. Nice comparison there. What about Roth accounts? Because I'm getting a little bit of a feel that there's a similarity there too.
Well, before we get into Roth accounts, a couple more things I want to touch on with the 529.
Okay.
There's sort of a thing called a catch-up provision. They don't call it a catch-up provision, but they'll allow you to put up to 5 years worth of contributions into your 529 if you haven't done that. So, for example, you could put $95,000 per child. A married couple could put up to $190,000 into the 529. One proviso there is that once you do that, then you can't contribute again for another 5 years.
Right. Okay.
What I like about these accounts, of course, is the taxability. They grow tax-free, and when you spend the money on qualified items like education and all those things around education, they come out tax-free.
Okay.
And the other cool thing about the 529s is anything that's left over after the child has finished education and all, up to $35,000 can go to their Roth IRA.
Nice. Okay, that's unique. Okay,
Really nice.
So now that you've mentioned Roth, let's go ahead and talk about Roth accounts. And how are these new Trump accounts similar and different from Roths?
So a Roth account for a child is basically, obviously, still you have to have earned income to be able to contribute to the Roth accounts. For example, the child may have, working part-time at an ice cream parlor or whatever. Maybe you own a business and you put your children on the payroll. So you can contribute to the Roth accounts there. So the Roth, like all Roth accounts, the money's going to go in after tax, and it's going to grow tax-free.
Right.
And the earnings will come out tax-free.
Right.
For their retirement, provided you don't withdraw before 59 and a half.
Right.
So the other interesting thing about Roth accounts for children is if they earn less than $14,500 per year, that's under the standard deduction. So essentially what that means is the contribution into the Roth could be tax-free. It grows tax-free. It comes out tax-free. Triple tax-free. I love that idea.
Nice. That's certainly a good one. Okay. Trying to think if I have any follow-up questions here. No earnings limits for contributing to the Trump accounts, unlike Roths. And no time limits on a Roth account. You're not supposed to touch it for 5 years after you open it, but no such time limit exists on the Trump accounts either.
Right.
Okay, very good. Any summary or anything else we want to add about this?
I think in summary, basically the way we look at the Trump accounts is they're a supplement.
Okay.
I don't think they would eliminate 529s. I don't think they would eliminate Roth accounts.
But maybe if you're maxing out your 529 accounts and or your Roth accounts, you could fall back on this.
Absolutely.
for your kid. Okay.
And remember, you got that $1,000 of government seeded in the account.
Hey, there you go. But that was a one-time $1,000.
That's a one-time,
not every year.
seed.
Very good.
Right.
Okay, there you go. Your crash course in Trump accounts. Don't forget to hit those like and subscribe buttons down below the screen there. Again, catch all episodes in the future with Doug Garrett and myself. But that's going to wrap it up for this edition of The Vault. I'm Brice Payne.
I'm Doug Ray.
And this has been The Vault. Hey, it's Brice Payne with the Wealth Guardians. Thanks for watching our weekly series, The Vault. Do you know we also have a weekly radio show where we discuss all things retirement? You can listen to the Wealth Guardians radio show live on 94.5 WPTI in the Triad on Saturday mornings. But if you miss the live broadcast, you can also catch it on our YouTube channel or find us on your favorite podcast platform each Saturday morning. Make sure to subscribe wherever you listen so you can get notifications when we release new episodes. Want you to remember, good retirement plans do not create themselves. We'll talk to you soon.